Right, Dubai property prices surge on, showing no sign of a Christmas slowdown. That's according to the latest market report from Property Monitor, which will be out a little bit later on today. We're very pleased to have in the studio the Property Monitor COO, and now apparently the Director of Market Intelligence and Research at Cavendish, Maxwell, a man who seems to have acquired another hat since we saw him last. Jan Jahinki, thanks for joining us.
Thanks for having me. Morning.
We're going to find out why you're moonlighting in a little bit. But first off, what would we normally see in the run-up to Christmas?
Typically, transactions slow down. The busy time, September, October, November, and we start to see it taper off late November, early December, and then it tapers off and starts to pick up again sort of February, March. We've not seen that. We've hit over 10,000 transactions in November, putting us on track to about 95,000 transactions for the year. So it's continuing with strength.
Why?
Very interesting. Dynamics of it have shifted. A huge portion of that now is off-plan. Right? If we look at the numbers and really get down to the nitty-gritty of it, it's about 55% in off-plan properties under construction right now, reverting back to that 60-40 split that the market typically was. Coming out of COVID or into COVID, it reverted. Right? It went to the completed property market. That's where most of the transactions will happen. It's been slowly changing that dynamic ever since, and now it's heavily populated by off-plan.
One of your previous reports, you were concerned about the amount of off-plan coming to the market. Is that concern growing?
I'm always concerned about supply, right? Record number of launches too. Right? We're at about 45,000 units have come to market. New units to come to market this year will end probably over 50,000. That'll be a record. Right now, a lot of that is being picked up. It's being absorbed. That can't go on indefinitely. Yes, we've had influx of new buyers and people coming in, but the pace that it's going on, I think what developers are, and some probably need to do a little bit more, is learn from the lessons of past. Carefully gauge what they're putting in and when they're putting it into the market, and not potentially flood the market and put us in a position of oversupply. What cripples most markets, what bursts the bubble, what takes a bull run to a bear run, majority of the time, it's oversupply.
And yet we have a new investor that will be able to travel again. The Chinese market is coming. What will that mean for us?
Dubai always seems to be the net beneficiary of things, right? The Chinese, from my experience, they love real estate in their investment portfolio. The fact they're traveling again, I think we're going to go back to see the trend what was pre-pandemic, where the Chinese investment was starting to really grow in Dubai. So you're probably going to see that coming back into the market as well. Again, from experience, Chinese love to buy around a couple of different things. One is the kids go to school somewhere, right? Getting them out of the country, sending them to school. Another, somewhere they can get citizenship or longer-term residency. So now that you've got golden visas and options for longer-term residency here, that checks another box for them. The third is to park money and capital appreciation. So a lot of those things coming into alignment, I think you will see those numbers start to tick up again. Wouldn't be surprised if it goes back to we've got tour buses going around from project to project. And I think you'll probably see a lot of that demand go into that off-plan market. So again, could play in favour of developers, could help keep that all under control, but something that should be closely monitored.
What could it mean for prices?
So looking two markets, we've really got to look at it this way: the completed and ready market and the off-plan market. I think you're going to see completed and ready in villa and townhouses. It's really started to plateau. It's found a normal pace of things. It's matured. It's not going crazy. Apartments prices are still ticking up. So those looking in some major key areas that are popular, it could continue to drive prices up there. Sorry, Brandy. And the off-plan market, developers are launching those projects. Each time they launch a new one, they're adding a little bit more on a price per square foot basis. So it may put some upward pressure on those prices. But in general, yes, probably put a little bit more upward pressure, but I don't think you're going to see huge jumps come into the market.
What's your outlook for 2023 in general?
In general, market remains strong. I think those transaction volumes will start to taper off. They can't keep going indefinitely. Price appreciation overall will continue its slowdown, right? So we were looking on average about 1.25% month-on-month appreciation throughout the current recovery, but the last 12 months it's dipped down to under 1%. So I think going into the year, we'll probably see 5 to 8% price appreciation as a whole over the year, with the tail end of the year probably seeing a couple of small dips in the market.
What about rising interest rates. We've still, according to the Fed, got a wee way to go. Is that going to weigh in on our market and how?
Yeah, it's going to have an impact. Again, in that ready property market where there's mortgageable property, it's going to take some of the ability to purchase out of the equation there. It's not really going to affect the off-plan segment. By the time those properties off-plan hand over, we'll probably see rates normalize, come back down, but it will take some of those people buying for end use, potentially, out of the market.
Speaking of purchasing, you appear to have acquired another job title since we saw you last. Cavendish Maxwell, a couple of weeks ago, took a majority stake in Property Monitor. What does that mean? Not so much even for you, but for us. What does that mean for the market?
So it's a good thing. Look, they took a majority stake in the business. We now...
Can you tell us how much?
Great question. What can I tell you? It comes on the back of us having a really good year, pretty much doubling our revenues, expanding where we're selling products and other things. We're used by about 50% of developers bringing inventory to the market, 80% of the brokers selling that. So it put us in a good position.
You're not going to give me a number, are you?
Board's happy with the number. However, the exciting thing is it's actually a bigger part of Cavendish Maxwell overall play. It's the first acquisition, the flagship in their innovation hub. We're actively looking at other acquisitions as well. So strategically, we don't want to sort of reveal the numbers and the things behind it at this stage. So I'll stay mum on the number for now, but it is the start of some pretty good things to come.
Are you expecting to see more consolidation in this market in general? We've had people buying into real estate platforms, real estate agents buying into real estate platforms, Cavendish Maxwell taking a stake in you. Very quickly, 20 seconds, are we seeing all the ends of the market move closer together?
Yeah, I think we will, across the spectrum. I mean, Cavendish Maxwell is a real estate advisory, consultancy and valuation business. Valuation's tied to mortgages, right? So if the mortgage market shrinks, there's going to be consolidation there. Mortgage brokers as well, that's going to consolidate. You've got some big players growing in that business there. Brokerages right now, they'll continue to expand while the market's hot. But then, say, 12, 24 months from now, you'll see further contraction there. I also think you might see a couple of developers come together and potentially merge.
Interesting stuff. Jean Jahinki, COO of Property Monitor and now Director of Market Intelligence and Research at Cavendish Maxwell. Thanks for your time.